Very good morning everyone, this is George Beyrouthi from FS Securities giving you the market report, and we are a stockbroking firm on the Gold Coast in Queensland, Australia. And today I will show you how investors and traders can make money on our stock market. I'll show you what is hot and what is not, and what you should hold and what you should fold. And by the way, if you enjoy the presentation, please give us some feedback. First of all, I'm going to show you the advances and declines on Friday when the market was shut before the long weekend in Sydney and Melbourne. You can see here for the last 3 days we've had a tremendous momentum on the upside. On Friday, 31% or even say 32% of our market was advancing and 21% declined. And see, before the last 3 days we've had 5 negative days with declines. However, remember that even though the market was going up and that was positive momentum, the volume dropped quite considerably. So that really can at the same time show you that the market is a bit uncertain about the future and it's not very strongly positive. And over the last 10 weeks, you can see here that the last 2 weeks we've had more overall declines than advances. So we might see, maybe we can call that a dead cat bounce. Okay, now in terms of the last 2 weeks, we can see that the Dow was up nearly 5% last week. However, the week before it was actually down, and when you put the 2 weeks together, the market over the last 2 weeks was only up 1.6%. So we've had a good momentum last week and not so good the week before. And the same thing goes for the Nasdaq and the S&P 500. If you look at the US dollar, we can see that over the last 2 weeks nearly lost 1%. The Australian dollar, on the other hand, over the last 2 weeks gained 1%. The euro was also strong. The Japanese yen against the US, actually the American dollar versus the Japanese was weaker. Now in terms of the gold was actually up by nearly 5% over the last 2 weeks. Half of that was nearly last week and the week before also. Silver also had a good 2 weeks, as you can see here. Oil, on the other hand, after falling 8% over the last 2 weeks, recovered some of the losses last week. And if you want to learn more about the other currencies and the other commodities, all you have to do is call us. Now in terms of our market, if you look at all the indices, our market is governed mainly by two sectors, the financial and the materials. When both sectors are up strongly, we find that the market responds accordingly. And when they're both down strongly, the market acts accordingly as well. Last week, the financial was up 1.4%. However, the material sector, which contains BHP and Rio and Fortescue, was down 0.4%. And that has not changed over the last 2 weeks for the materials. However, over the last 2 weeks for the financials, the market was still less than 1% higher. The S&P ASX 200, that is the gauge for our market, was up 0.7% last week. However, over the last 2 weeks was still down 0.2%. Now in terms of the various stocks, you can see here, if you go down the line, Newcrest Mines had 5% increase, and so has Bramble. There were two best performers. In terms of the negative ones, you can see that Rio was down 2.3%, Woodside Petroleum was down 2.2%, responding to the 8% decline in the oil price 2 weeks ago. So again, what we can see here, that actually governs our thinking about which trade we should put our money into. And if you want more information, all you have to do is call us. Now this is the mechanical system that I designed over the last 20 years, looking back last week and trying to predict what may happen in the future, or at least in the near future. We can see that the Dow, after being bearish for 4 weeks, last week gained a little bit of strength, with the bull starting to appear for the very aggressive trader. However, the Nasdaq was still negative, and in terms of gold gained quite a bit in the last 2 weeks. Well, if you go back 10 days ago when we did this week here in the middle, the 1st of June, obviously we were actually bullish in the gold, and if you took our advice, you would have made money the very last week in gold. Of course, trading Newcrest mines. And crude oil, the same thing, with Woodside Petroleum falling. We also predicted on the 1st of June that the oil was actually bearish. The Australian dollar, we've gone from bearish to bearish for the long-term investor and bullish for the very aggressive trader. And we continue to be bullish for the very aggressive trader. Okay, now if you go now to our chart for the Dow Jones, you can see that the market has gained quite a bit after falling before Christmas, regained all the losses, and then started to fall. And we've had a good week last week, and we expect again what will happen this week. At least on Tuesday morning, we can see that the market in America was higher slightly, not a great deal, and our market futures is showing that we might go higher by 23 points. However, for the remaining week, we are very conservative and very cautious. Now, you see that orange line is a 50-day moving average. It hit it last week and bounced off it. If the Dow this week goes above the 50-day moving average, I think that will be positive. If it bounces below it and goes below it, heading towards the 100-day moving average, then obviously that's a bad sign. So yet to see what may happen this week. Of course, there are a couple of things that may govern the market. The US-China trade talk, and obviously both of them are a loggerhead or headlogs, against each other. They're both showing brinkmanship, and it doesn't look like China is going to give in to the bullying of the American strategy. Now, if you look at our market in terms of the sectors, the energy is bearish for the last 2 weeks, and the small companies, the mid-cap 50, again bearish. Telecommunication is bullish, and we've seen Telstra going almost to $3.72 because of the 5G rollout. Gold was bullish, and the financial sectors and the banks also were very bullish, and we've been bullish for the last 3 weeks. And again, because the interest rate in Australia is likely to fall further towards the end of the year after the last drop to 1.25 from 1.5, then the banks obviously would benefit a great deal from it. Now, looking at our ASX 200, you can see here before Christmas the market fell in conjunction with what happened in America and other market, regained most of it, and even exceeded the very top high, and we got to 6,500, where we found a very strong resistance around that level. Are we going to see 6,500 again anytime soon? I doubt it. However, we've got here a couple of indicators. The parabolic stop and reverse is bearish, and on the weekly side we can see that the stochastic is bullish and the parabolic stop and reverse is bullish. Because we have bullish one area and bearish the other, we are neutral. This is how it works. You need to have 5 indicators in the positive side, confirmed by 5 positive indicators on the daily, and if both are in conjunction and in harmony with each other, then we go in that direction. And the reverse, of course, is true. 5 bearish here in the weekly, with 5 bearish indicators out of 8 in the daily, we go bearish. Now, in terms of our recommendation from the macro, which is the mechanical system that I designed, the banks, CBA, ANZ, you've got here NAB and Westpac. Westpac, for some reason, turned neutral. So if we're going to trade the banks, we will trade CBA first, ANZ second, and NAB second as well. And we'll leave Westpac out this week. What we see here also that Transurban, TCL, turned very strong last week. So we may want to have a look at that as well. Telstra still strong. Newcrest Mine still strong. However, we heard this morning that gold dropped by $5 overnight. So we just have to be careful with Newcrest Mines. BHP has gone from neutral to bearish for the very aggressive trader. And we are neutral for the investor, the long-term investor. And you look at Rio, we turn bearish at the same time as BHP. And that is governed by the price of iron ore, which dropped quite a bit last week. So on the daily side, what I showed you, that was the weekly, week on week, and that's what happened last week, day on day. The banks continue to be very strong right through the week, and so is Newcrest Mines, and so is NAB, and Westpac on Friday turned from bullish to neutral. So some news came out on Westpac on Friday that the market decided to go neutral from bullish. So the indicator started to move downward. Worley has been bearish for quite some time, and Wesfarmers is also very strongly bullish on the daily side. And you can see here, even though BHP was bearish on Friday, was up by 2%, small recovery. And Rio, you look at Rio, was down 1.3%. Wesfarmers was down 0.8%, even though it was bullish on Friday. So again, you've got to really look at the whole thing, one with the other, rather than just take one indicator and one signal. So, I mean, the market is volatile, there is no question, and it's always very difficult to predict with 100% certainty where the market is going to go from one day to another. So it's always important to look at charts and keep your ears to the ground to know what is happening. Okay, let's now go to the Flight Center, a trade that we took sometimes in March. That's nearly 3 months ago. We entered the trade because we heard that there was a special dividends of $2.09 coming up very shortly afterwards. So we entered the trade when the market was higher than 46, but we managed to get in at $45.13. What happened after that was not a very good thing. The market went down to 44, and as it approached the day of the X date, the market picked up again, closed here, and then after the payout, for some reason people decided to take the dividends and sell the shares. We went down below $40 and we decided to hang on. And instead of just selling and getting out and take the losses, we decided to take some more trades. So the first trade we entered at $45.12, as you can see here in the middle of the page, and that was 120 shares, spent $5.4 thousand, $5,400. We entered the trade a few days later, and we entered the trade at $43 to average, and we bought 100, and then our average dropped from $45.13 to $43.20. And then remember, we received $2.09 dividends, so our actually gross payout was $42.09. The market closed on Friday at $42.47, so we're just slightly up on the market, very small profit. But you can see here, on Thursday before the market shut, we were actually very close to $44.30. Should we have sold? Well, that's hindsight, of course. If the market goes up to $45, we will actually intend to sell, take the profit and run. Another trade we did also, we did some iron condor option trades, and we wanted the market to be below. We had actually several trades. We wanted the market to be below 6,500 on the 6th of June, last Thursday, and it did, and we want it to be above the 6,200. And our clients made $1,700 profit before dividends, before commissions, and we take $100 per leg on each of those. So if you take about 500, the net was nearly $1,200 trade for approximately 4 weeks. Okay, because I don't know your financial circumstances, there is a disclaimer here. Before you take any action, please consult with us or talk to your professional advisor. And if you want to ask any questions, of course, all you have to do is communicate with us. You can write to me at george@fssecurities.com.au, or you can call me on my mobile. If you're calling from overseas, you put 61 first and take the 0 out. So overseas clients, 61-411-259526. Okay, that's all for us here at FS Securities, our stockbroking firm here on the Gold Coast in Queensland, Australia. And have a good week and happy trading.